Well, let's turn our attention now to East Africa's biggest economy, where the capital markets have been in a deep slump for most of 2018. Now, in this quarter, the mortgage lender Housing Finance, the industrial group Samir, and the cement maker Bamburi have all issued profit warnings. Now, by the close of trading on the 4th of December, the benchmark NSE 20 had fallen by 24.5% so far in 2018. Meanwhile, the all-share index had fared no better, with a 14.4% decline over the same period. The corporate bond market is also virtually frozen, especially in the wake of liquidation and the receivership of Imperial Bank and Chase Bank, respectively. Now, between them, the two firms had over $60 million of outstanding corporate bonds. Kenya, of course, still has its rate cap in place, and from January 2019, a 30% compensating tax will apply on proceeds from bonds. Now, earlier, I asked the CEO of the Nairobi Securities Exchange how the bond market can be revived amidst these challenges.
Debt capital, especially capital market debt capital, is still a very attractive opportunity. One, because it comes, it's easier to access, it comes at less stringent securitization requirements, unlike bank deposits, bank loans, etc. And so we are working very hard, especially with large corporates that have got higher credit ratings. You remember East Africa Breweries were able to do 2 tranches of a very successful bond issuance. They did 6 billion shillings, I think it was last year, highly oversubscribed. Right. So we do believe that any large corporate, supranational institutions, IFC, FDB, if they want to issue bonds in the Kenyan in local currency, it'll be highly successful. Right. We are conscious that for you to issue a corporate bond at this time, there's normally you normally have to rank or issue at a premium to a similar instrument, say the government, what they call risk-free assets, for instance, government sovereign debt paper. And the fact that we've now removed the lower threshold of the interest rate caps, okay, that then provides some room for issuers to be flexible and be able to just price their assets just slightly above the government paper. When we had that cap on both sides, then that it made an issuance very, very unattractive, because investors were asking for cap plus. But now I believe that any corporate coming now, if a government paper, a 5-year government paper is at 11%, you could probably just price 1% higher and at 12% and still be able to raise the money. I think investors are very confident about the market and really about the issuers. Of course, we're still working with the central bank and other CMA to find ways of resolving those 2 other papers, because we believe if we're able to unlock that, then we'll fully restore the confidence in the market. Yes.
Well, we do have a compensating tax, which of course is part of the Finance Act of 2018. It will apply at a rate of 30% to proceeds from tax-free bonds, and that's from the 1st of January 2019. So do you expect this to further suppress interest in the bond market? How do you expect that to impact investors' interest?
We have reprofiled our current bondholders and tried to just see how heavy the impact will be, because this tax actually affects distribution beyond to the underlying shareholders. So, for instance, if you're a collective investment scheme or if you're a mutual fund and you want to distribute that income, then the ultimate shareholder pays the compensating tax. However, these assets, for instance, the collective investment schemes, some of them have got tax-free status, meaning that they're tax exempt from income tax owing to their registration, and that's what we're exploring. Pension funds are definitely not tax exempt, so hence they do not have to pay their tax. Direct retail, who buy the bonds directly in the market, don't have to pay that tax. So we really have to do a full scan to see what is the real impact of this, and how is it going to affect the ultimate beneficiary. So if we had a heavy sector that were in a collective investment schemes which are not registered, hence then the impact would be great. Right. It was a bit of a surprise for us as well, because when we were discussing the finance bill, we did not This was not one of those that was on the table for discussion. So we will be re-engaging the National Treasury.